Is Xpeng Motors at risk of going under? When it comes to the Chinese EV market, this is the company that has underperformed almost every other EV startup in 2022, despite its insane triple-digit growth throughout 2021 and parts of 2022. Deliveries and revenue for the company fell by more than 45% in the fourth quarter of 2022, resulting in the stock being down more than 80% over the past 1 year. The overall China's EV space has struggled in 2022, but despite the recession, most companies have performed really well. You can look at the performance of NIO, Li Auto, BYD, and Tesla to see exactly what I'm talking about. But Xpeng Motors, despite its innovative value proposition, its crazy self-driving technology, and its great design, can't seem to budge the Chinese EV customers. In this video, I want to address the probability of Xpeng Motors going bankrupt within the next few years, what mistakes they made last year to see such a sharp decline in deliveries, and what they expect to do this year to improve, and some of the new models they're expected to launch. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's understand the damage Xpeng has done in 2022 to its revenue, deliveries, and cash position. As you can see, 2020 and 2021, which were the first few years of Xpeng's mass production revenue streams, were fantastic. Throughout the first, second, third, and fourth quarters, they saw really good revenue growth up until the end of the year. However, 2022 started off so well that all of a sudden their revenues fell in the third and the fourth quarter on a sequential basis. And on a year-over-year basis, the fourth quarter was the first time they saw a revenue decline, which obviously spooked a lot of investors, customers, and led to such a destruction in value. Now, it's extremely difficult to speculate what caused that decline in deliveries, because the company's gross margin was clearly very healthy. In the fourth quarter, it fell from 13.5% to 8.7%, which leads me to believe that most of their delivery declines were most likely driven by heightened competition. And it turns out that some of that gross margin compression is most likely also driven by lithium carbonate prices spiking at the end of last year. Whether this correlates with the Chinese recession in the stock market, which also happened to bottom right around that October to November timeframe, I don't know. But overall, the trend for the first quarter of this year has been fantastic, with prices down almost 50% since the peak. Yes, the midsize sedan that Xpeng's been selling since 2020 is still their best-selling product. I think this is really the foreshadow that led to Xpeng's decline. Because obviously, a product that's 3 years old should not be your number one if you're still innovating and launching new products. It's pretty clear that Xpeng's been very bad at marketing their products and doing customer acquisition. Because the P5, which is the cheapest electric car that is not a city car on the market in China right now, is one of the best deals on earth. Yet the vehicle is not outperforming their P7, and neither is their flagship SUV. The G9, which supports an 800-volt charging architecture, offers much more range than something like the BMW iX and is competitive in pricing with something like the Tesla Model Y, is still not outperforming revenue and sales. However, as grim as the situation looks like, I don't personally think that all hope is lost. Xpeng's value proposition to consumers in China is still very high. They have a product that is capable of self-driving, an LFP battery technology that can charge at 480 kilowatts, and over 2,000 charging stations within the country. They also have a relatively wide product offering that is cost competitive with some of its nearest competitors, especially after the recent price cuts the company did in January of 2023. The main issues the company is facing right now is their inability to scale their product offerings and also the way they've approached their segmentation. They obviously don't have a luxury product on the market per se right now, and they've been really starting off with sedan to compact to SUV. Instead, I think it should be the opposite way, where the company launches a very high margin luxury flagship vehicle and then trickles down to the smaller subsegments to allow consumers to have more options. And it seems like Xpeng understands that, and that is exactly what they want to fix this year, with the launch of 2 new fresh products. The very first of these is going to be launched by the middle of this year, which is going to be the Xpeng G6. This is going to be a crossover to challenge the Tesla Model Y, fitting right in between the Tesla Model 3 and something like the Tesla Model X. This thing is expected to have a mile range of 404 miles and being priced potentially lower than the Tesla Model Y, starting at $29,000 USD. With the customer satisfaction success of something like the Xpeng G9, which is much bigger than the G6, I think this product can do quite well. It not only establishes Xpeng as a leading automaker in different SUV segments, but it also gives the company a good exposure to the higher end, more gross margin supportive segments of the EV market. And speaking of high gross margin, Xpeng's second product to be launched this year is expected to be a multi-purpose vehicle, or an MPV. Codenamed the H93, I think this vehicle is going to truly set Xpeng apart from some of the other EV startups because of just how popular MPVs are in China. This is something we don't see a lot in the West, but MPV vehicles like these, which offer this boxy and extremely spacious design for 7 to 8 people, are extremely popular in Asian developing countries. Not only because they tend to offer a great experience for multiple people over long distances, but also because they offer very cheap and competitive pricing compared to a minivan like we see in the US. And as of right now, in the electrification space, there are actually only a handful of EV makers that are producing MPVs for China, with Zeekr being one of the only ones with a 500-mile range that entered production last month. Geely-backed Zeekr Automotive, BYD Mercedes, and Volvo are the only automakers expected to produce an electric MPV in 2023. This means Xpeng will have a much easier time targeting customers in this space, doing less marketing, and creating a unique value proposition around their other products. And to address Xpeng's ability to even do these new product launches, well, the company is still decently capitalized from a cash and current assets position, even if their revenue growth collapsed by over 40% in the fourth quarter of 2022. The company is currently sitting at around 32 billion won of cash and cash equivalents, which converts to around $5 billion USD. In terms of their debts, they don't have too much in the short term, at least, of only around 24 billion won, but it is important to note that it is growing on a year-over-year basis. And in terms of the total debts, including capex, their liabilities sit around 34 billion won. And as you can clearly see, they have plenty of assets of around 71 billion to cover all those liabilities. So at least in the short term, in the next couple of years, the company will most likely not have to raise a lot of cash. Does this mean that the company can create good shareholder value in 2023 after the destruction we've seen over the past 12 months? Who really knows? But I am still cautiously optimistic that this business can recover next year, even though it's been a very difficult time. The price of sales of this company right now is only 1.67, which is one of the cheapest in the overall EV startup industry. And it's pretty clear that JP Morgan and Morgan Stanley tend to agree with an analysis with their idea that the current sell-off is actually an opportunity for the overall EV space. Apart from Li Auto, which has maintained gross margins of more than 20% because of the fact that they mostly sell plug-in hybrid vehicles, NIO and Xpeng have been discounted significantly more. This, in my opinion, definitely creates more of a risk to reward opportunity than some of the other players in this space, especially for the second half of the year when we could expect costs to decline even more. So, what do you guys think? Could Xpeng truly recover in 2023? Let me know your thoughts down in the comment section below, and I'll catch you guys in the next one. Take care.